All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thank you so much for joining me this morning and every morning at 9 a.m. Eastern Standard Time here on our YouTube channel. If you haven't already, please subscribe to our channel. Make sure to hit that like button. If you like these videos, share these videos with somebody who you think would like to hear this information. Appreciate it again, as always. Let's go ahead and get started. It is the last day of the month. One of the most bullish days of the year, actually, historically speaking. Let me go ahead and start that off first. I can find this tweet. If I can find it. Been nice to have it available, but it was right here. All right, guys, check this out. January 31st is the best day for stocks in the month of January. You can see on average about an increase of 0.31% on the S&P 500. Again, this is just historically speaking the best day of January since 1950 in aggregate. So let's keep that in the back of our minds. All right, let's go ahead and get started. Dow futures up 69 points, NASDAQ up 35, S&P 500 futures up about 0.28%. Russell is up 0.40%. 10-year treasury yields are falling 3.49%. The dollar was spiking higher and then reversed, did hit some key support, and we've been kind of hovering around there, right around the 10, let's call it 102. And you can see right here, 102 is holding up. It seems like it will hold up at least until tomorrow's FOMC meeting. The volatility index, the VIX, is now coming in to flat. It was a little higher this morning, right around 2064. We are now below 20 at 1995. Crude oil is down 1%. I want to chart something for you guys. We talked about XLE before. Gasoline is down 1%, $2.47 a gallon. 1934 for gold futures. That's down a quarter point. Silver futures down about 1%, 23.52 an ounce. Copper futures down 1% as well. $4.16. Euro dollars up 3 pips, pretty flat, 108.55. Dollar yen 129.90, down 54 points. And the pound dollar 123.23, down 27 pips. Bitcoin is up on the future side about 2%, 23,265. Ethereum at 1594, and that's where we are this morning. We were red this morning, about 150 Dow points on the futures. We had some info come in. Here's the information. U.S. employment cost. We'll go ahead and use Live Squawk here. This is the big one. U.S. Employment Cost Index Q4 up 1% versus the 1.1% expectation. We also had Canadian GDP number, our neighbors to the north. They are up in terms of month-over-month GDP of 0.1%. Their GDP is very similar to ours, at least in terms of growth. The advanced GDP 2.8% versus the expectation 2.7%. Housing Price Index actually came down 0.1% versus the expectation of 0.5%. I'll retweet that and this info if needed. CoreLogic 20 city month over month down 0.54%. This is home values, and you could see that it is lower than expectations in terms of cost in these real estate properties in the 20 biggest metro areas. I went ahead and retweeted that as well. Okay, so we did have some earnings this morning, tons of them. Let's see if there's anything that stood out. General Motors had a double beat, top and bottom line. Spotify is up this morning as well. Spotify is up about 10%. Now has 205 million paying subscribers globally, up 14% year over year. I've had Spotify app now since 2015, the full version. I love it. That's an app that I'll never delete. I do not own Spotify stock, but I do love the app. So keep going, Spotify. You guys are doing great. I love the service, of course. ExxonMobil extended and increased its share repurchasing program with up to $35 billion of cumulative share repurchases for 2023 to 2024. They reported earnings. They did beat on the top and bottom line. EPS of $3.40, beating expectations of $3.29. Revenue of $95.4 billion, beating expectations of $94.7 billion. Let's go ahead and chart XOM, and then we could see here that it is down marginally pre-market, about 80 cents. But really the big one I want to show you guys is XLE on the weekly chart. You could see 1, 2, 3, possible triple top there. So again, we could be getting rotation out of energy stocks. it comes to the point, and how much more do we need to see from energy stocks? They need to come up higher, and the problem is that now we have expectations raised for them into 2023, yet oil prices are coming down. So I don't like energy here, at least not in this price. If we start getting to around 80 or 75, we can talk about it again. I would love to see if we can retest 65 and give us an opportunity to buy some on XLE. But other than that, I wouldn't want to touch this this sector right now, just due to the fact that we have such high expectations due to high profit. Again, CVX, Chevron had their best profit ever. It's going to be very difficult to keep that going when XLE is beholden to the volatility of commodity prices. You're probably saying to yourself, well, Carlos, Apple beat, Microsoft beat years ago, and they continued going higher. Yes, but they're not beholden to commodities like oil. And again, oil being the lifeblood of the world, obviously, is still controlled by the biggest cartel, OPEC. And then you have as well, you have geopolitical issues as well. So again, unless we expect another kind of war happening in the Middle East or in Europe of some kind that's going to create demand for oil or supply of oil to come down, I think it's going to be rather difficult to want to go long here in terms of XLE or any energy stocks, unless you're trying to just hold the dividend, which is fine. But the main driver here, at least with XLE holding up here, is a China reopening, meaning demand will be strong again for oil. So that remains to be seen. We'll see what we get. I prefer to own emerging markets over energy instead if you want to play the Chinese reopening. But again, that triple top looms. So again, I'm not looking towards going long on oil at all. Let's go to S&P 500 futures. Actually, no, we'll go to SPY. Make life easier. Let's go ahead and take a look at SPY. Went ahead and drew this trend line here. And you could see that we broke below it and then we bounced off the trend line. Again, this is the trend line, 398.62. I was expecting that we may retest the trend line and now we're bouncing. So I did open a put on QQQ as a hedge towards the FOMC. And I thought we were going to get that retest of the trend line. We did, but just overnight. Let's see if we come back down. So at least on SPY. So we do have a small gap to fill at 288.44. That's my target. We are now at 291.07. I'm okay with holding my QQQ puts, but again, you still have that double top looming. We're still below the 200-day moving average on the daily. So maybe with this, best day in January, we get a little bit of a pop. But again, I wouldn't get really excited on the S&P 500 at all until we get to 4,100. And 4,100, as we talked about on Friday, you could see that is still the resistance moving forward. Maybe we bust higher with the Fed and FOMC being more dovish than expected. But again, it's kind of a two-sided street here. Again, there's a lot of bears and a lot of bulls. So I think I'm okay with being at least with some puts here, just on Qs. I'm okay with the hold that. And again, just like I said in the newsletter, you buy insurance not hoping that you crash your car to pay out. You have insurance just in case the worst happens and we continue to fall. So I'm willing to hold on to that. Not a big deal. Let's see if we continue higher. Obviously, I prefer that we continue higher because I am bullish, obviously. But again, it's good to have some insurance. Buy insurance when you can, not when you have to, is the MO. Let's go to volatility index. We do have this gap to fill here at 1857. Maybe that fills with FOMC. Maybe we go to 22. Again, a very binary event. We'll see what we get tomorrow at 2 p.m. In terms of QQQ, I think we went over that double top. Let me go ahead and take a look at the hourly so we can see where we are. We're right back above the 100 MA. My target was right around 288. We bounced right off of that in the morning with that employment cost index. So, I mean, that's fine. Let's see how we open and move on from there. But again, just like yesterday, nothing really changed. I really didn't do much in terms of trading. Really just did the QQQ signal, and that's all we're watching right now. So all the fireworks will come in tomorrow. We do have AMD reporting after the bell. If you're trying to catch AMD, again, if you're going long, 77.12 is the target I'm looking to break for the upside. If you're looking for more downside action, 69.57. Best bet is just to wait on it and see what we get from there. Let's answer some questions. Okay, SPY calls for Leo this morning. All right. SPY, okay, we're back above the trend line. If we wanted to go play SPY calls, keep in mind, you have the FOMC looming tomorrow. You really need to get above 404.32 or 405. That's really the the level that you're looking for, and then you could target 408 or maybe 410. To be quite honest, I wouldn't want to go into SPY right away. Again, this trend line could reject this morning. Got to see how the morning opens. I think the best bet, Leo, is to kind of just take it easy today. The next couple of days are about to be very volatile. So again, it's okay to just sit on it. Let's make it a day where we're just watching, observing, and recording. And again, there's no need to spend a lot of ammo, especially when everyone's just positioning for tomorrow. Yesterday was a red day. Possibly we get a green day today. Just really depends on the positioning ahead of the Fed. Again, place your bets. That's basically what it is. Thoughts on Ulta long term? Can you break down the PE ratio? Do you consider it cheap? Let's go and take a look at Ulta on the daily chart. Again, we're just going to go ahead and take a look quickly at the chart. Ulta is a great company to own long term. Everyone's reopening. We talked about this late 2020 and 2021 with Investment Club. I had shares in Ulta. I sold it, but again, no big deal. I made profit on it. But Ulta continued to climb higher. It is breaking out. And again, Ulta, you're really pushing the fact that makeup, influencers, social media, everyone wants to take selfies. Everyone's back on the street. Everyone's back at concerts and traveling. Again, that's where Ulta is going to get the big boom. So let's go ahead and go over some of the fundamentals of Ulta and answer this question. So we're going to go ahead and go to FinViz. I don't have my Bloomberg up. I have it on my iPhone right now. And you could see here the chart on Ulta. Let's go ahead and take a look at the price to earnings ratio, trading at 22. That's actually not terrible, especially for a growth company. Look at their EPS this year, 478% growth, EPS 35% quarter over quarter. Target price is 517.88. I assume that's a collective of all the analysts. Only issue is that Ulta is a little overextended on the RSI. And does that mean that you have to go ahead and sell here, that we can't stay oversold? No, but again, we could also take a look at a possibility if we get some kind of pullback with the Fed or so. Maybe we can go back to around 492, maybe 471. Kind of tough to just wait on that where there's not a lot of gaps to fill. If it's a stock that you want to own, see if you can catch it below 500. If not, you may just want to go ahead and get in now if you like the field of makeup and all that good stuff. Really, the issue here is that the RSI is a little overextended, but in terms of how much they cost, the PE ratio is not expensive, trading at a 21 forward PE, young Danny. So again, not bad, still trading a little above premium on a relative basis to the S&P 500 PE, but it is still cheaper than a Microsoft. It is cheaper than a Coca-Cola. It is cheaper than a Costco, and it's cheaper than a Microsoft. Ulta's not bad. Not a bad place to get started. Let's go and take a look at TGT calls. TGT, we'll go to the daily chart, see what we got. All right, TGT, we know that has that big overhead gap similar to Netflix, and we actually filled that. There is another gap to fill right here at 172.46. If that's the target you're looking for, that's what you want to play. Actually, 176.95. The only issue, IV may be a little higher due to the Fed. So again, that's tomorrow. Let's see what happens with the Federal Reserve tomorrow. If you're trying to catch calls on target, you have to make sure there's volume on it. Anything you want to buy, you want to make sure that you can sell immediately at a good price with a tight spread. Tight spread meaning the difference between the bid and the ask. All we want to do in terms of trading is buy something in demand so we could sell it later for a profit. Do you think that target will be in demand a day before the Fed? Probably not. So you may want to buy a little bit of time on target. Maybe buy yourself 2 weeks of time. Target the 178 level, 177, maybe the 180s. You close right to the gap fill and you're above the 200-day. It's not a bad setup. The problem, Young Jay, is the FOMC tomorrow. Again, you may want to buy yourself some time. If not, just actually wait for Wednesday and see if you can get a better price. But you got to hold that 200 moving average around 166.50 for target to work. Are there any other charts beside TNX that we should be watching in order to trade bank stocks? To trade bank stocks, obviously you can always take a look at TNX. That's the 10-year yield. Again, we know there's some correlation there, TLT being the 20-year bond. But again, the other one really is XLF you can keep an eye on. I have an alert above 36.48. If that does break, then we can see if we can take a look at some bank stocks. But there really isn't a big indicator of when to buy bank stocks. You really just have to look at the collective of XLF or look at the individual names themselves. Wells Fargo, JPM, Citibank, Again, there's usually some news or headlines in regards to them, but for the most part, banks tend to move in tandem, headlines withstanding. If you get a Wells Fargo headline, that's obviously just going to affect Wells Fargo, maybe give a little bit of ripple effect to the other money center banks, Bank of America, JPM. The only issue with the banks, guys, is that the banks don't really move as much as you think. They're not going to move 3% in a day to catch momentum. You have to buy time on these names. And I've traded JPM many times. And the one thing I've learned is buy time. Buy that extra week of time. Do not trade same week unless you have some kind of catalyst ahead of time for like a JPM or a Bank of America. And they always have volume, Bank of America speaking. So there you go. That's your answer for Jeremy. Again, we could see in this chart on XLF, just get above 36.48, then we can see about 37. But again, not much in terms of trading here. If you look at JPM, very, very similar. I have an alert at 144.09. That was a trade that did not work out for me a couple of weeks ago. We do have a gap to fill at 166.18 on JPM. It looks like the banks are starting to move a little higher. Maybe some risk taking. Maybe the fact that we'll probably get some deals in terms of investment banks, M&As and stuff like that, as financial conditions are actually easing, and financial conditions are at its easiest, meaning looser monetary policy, financial conditions in terms of liquidity and loan availability, credit. It's a mixture of that. This is the best financial conditions area that we've had since January 2022. Now, again, starting January 22, we consider the flush that we've had for 2022, obviously. So take that with a grain of salt, but we'll see what moves forward. Today, guys, I don't expect much. Again, I'm holding that QQQ put. Let's see if we get continuation. Maybe we reject that trend line on S&P 500 futures, and then we'll come back down and at least retest this trend line here of around 4,000, 4,009. If not, we'll probably end up around 40.69 and hover around. Again, I don't expect much as everyone is just positioning ahead of the big FOMC tomorrow, whether it be 25 basis points, 50 basis points. I don't think so. More than likely, it'll be 25. No talk of a pause. We'll be monitoring the situation closely, and we expect another 25 basis point in March. That's what I expect. But again, anything can happen with the FOMC. So again, just always be vigilant. Something has been telling me to pick up shares of SDC, Smile Direct Club. What do you expect? SDC, very, very similar in terms of what the Ulta mentality is. Everyone's going out. Everyone wants to look their best. SDC is Smile Direct Club. This is a penny stock now. So be extremely careful if you're even trading this name. So I don't touch penny stocks personally. It just never works. But again, if you're trying to catch a lotto, I guess, on SDC, really all you're hoping for is that they're going to be acquired. That's about it. Now, again, if you want to go ahead and buy a couple of shares or trade options, I doubt there's trading options there. But again, if you're just trying to buy some shares to buy a quick flip, have a target and understand the fact that the money you might put into it, you may not even see that back. So again, that has to be one of those lotto mentalities there. What do you think about dividends? Love dividends, of course. It's one way to get income in your portfolio, kind of like a rental property. Think of it as stock trading as someone who's buying a house and flipping it versus a person who does dividends is someone who is renting out their home for that cash flow. So always keep an eye there. Yeah, not trading options there. You're not going to get any options on SDC, but you can also trade the stock. But again, penny stocks, be very, very careful. There's a reason why they're penny stocks. Just understand that. But I wish you the best of luck. If you get into SDC Interactive, I'm rooting for you to soar, and I hope you get some money there. VFC cheap dividend opportunities. I don't know much about VFC. I have to see exactly what their dividend yield is and their dividend payout. VF Corporation pays out a dividend of, let's see if I can find it here. Pays around dividend of 6.77%. I don't have anything here that says that they have continuing dividend payouts. That's something I'd have to research a little bit more. When it comes to dividends, honestly, if you just want to kind of make it simple, you could always buy SPY-D, which is the high yield dividend ETF with the S&P 500. But again, nothing wrong with VF Corporation. I don't know much about them. But again, when it comes to dividends, it's like buying a home and renting it out and getting the cash flow to pay your mortgage. That's really it. So if that team seems to be that kind of your style, then now you want to stick with dividends in your portfolio. If you're the type of person, I want to flip my house, I want to go ahead and buy a house cheap and sell it, well, then you're more of an active, trading stock manager if that's the case. And again, there's many ways to skin a cat. You can do it any way you prefer. Everyone is different, so there's always options. All right, guys, we'll go and leave it there. Tomorrow being the big day, don't expect much. We'll see what we get. Positioning day ahead of the Fed, and we'll see you guys tomorrow in the morning, 9 a.m. Eastern Standard Time. Have a great rest of your morning. Thanks again for joining me. Leo, Young Danny, Young Jade, Jeremy, Interactives, IZM, thank you guys for the questions as always. We will go ahead and see you guys tomorrow. Have a great rest of your morning. Enjoy your Tuesday. See you later.